and we'll look at the light crude market and blow up what we have here on our charts. The analysis that we do, of course, is cycle analysis. We add in momentum analysis, support resistance analysis, and projections that we put in a very unusual combination of analytical tools compared to what many other analysts look at. Here's a 10-year light crude that we're looking at on the weekly, a 2-year daily. That's how we have this set up, and we're using, of course, the think or swim charts where we do all of our work. Now, let's just blow this out on the weekly, and you'll be able to see and hear that. The cycle patterns that we're looking at here are what we call harmonics. On the bottom are the cycle brackets, and this is the big harmonic family right there, made up of a large dominant cycle and the 3 minor thirds in there. And you can see the clarity in the minor thirds, 1, 2, 3, and then 1 right over here. This was an extended cycle, and the reason for that was because the troops were lining up on the border in Russia, and that gave you the just get this lined up so you could see those prices. That gave you the big upward spike right over here when it should have been moving down. So it really was getting swamped in here by this big upward momentum. This the askSlim reversal scout that we have here on the weekly to show you the momentum condition. Generally, when it's green and moving up, the probabilities are high that there is inertia, that it will continue to move up. When it turns down and turns negative, the probabilities are high it will continue to move down until it gives you a reverse signal right there. So the conditions right now are still positive, even though you've had this big correction right there. It gets down to that major 50. It then moved up and got up into the resistance, and this really looks like a big range to us that it's going to be trading in, maybe getting up as high as 122 if the situation gets a lot worse in Ukraine. And if it gets better, then maybe you'll get a breakdown under here, and that would set up this kind of a condition or worse. So you see, we're not looking for it to get up to that high because it was very extreme, and more looking like it'll get up and test the 78.6 right up over there. That's that red line. Now, here you can see the daily chart on light crude, and it's creating this triangular shape. The odds are that ultimately when this is over with, it will try to get to the upside again, or try first to get to the upside to this area. But again, this we think that the extent of the rally that we had up to $130 is going to take a while to consolidate, and that's really what we're looking for here, is more of a consolidation or range trading that we see. So it makes sense it would be down under 100 and up to about 120 as the range is what we're looking at right now. If it got underneath this cycle low right over there, which is at about $92, that would then say that there is a much more negative situation, a much more negative condition going on, and that this rally right over here of this cycle right there that had not resumed to the upside was over, and that then the overall trend would likely form to the downside. So if it gets under 92, that's the signal of a lot more negative action to come. And right now, the highest probability is for it to be in that consolidation range that you see right there in light crude.